In this week's highlights, we'll take a look at how escalating trade tensions between the US and China may impact the Asian commodities markets and which products are already feeling the heat. US President Donald Trump last week signed what he said was the first of many trade actions against Chinese imports. China responded by announcing retaliatory tariffs of US imports worth up to $3 billion. News of the US tariffs sent Chinese steel rebar futures diving last Friday. The tungsten bidder price, a closely watched barometer of steel performance in China, fell by about yuan 100 per dry metric tons day on day. Iron ore prices were down more than $5 per metric tons week on week. Some observers say that warmer weather in China may lead to more construction activities. As construction is the main driver of steel demand in China, this is likely to support the iron ore market. With that, our social media question this week is, do you think stronger domestic steel demand in April will save the better iron ore markets? Share your thoughts on Twitter with the hashtag #PlexMM. Now back to the tariffs. China retaliation has added a new fresh element to the tariff situation, pulling down the US dollar, which in turn pushed out the oil futures on Friday. Oil markets are watching for more cues to price direction amidst the international trade tensions. China is the fastest growing buyer of US crude, and the trade war could pose a threat to the trade flow between the two countries. China Ministry of Commerce said it might impose an additional 15% on top of the existing 30% duty on denatured ethanol imports from the US if the two countries fail to reach an agreement. This will add pressure to the fuel ethanol market this week, with Chinese ethanol buyers retreating to the sidelines, waiting for more clarity before booking new cargoes from the US. Meanwhile, LNG market observers say that protectionist policy could hurt both the US and China in this looming trade war. The US has identified increased gas export as a possible way to reduce its trade deficit with China. On the other hand, China wants to grow gas imports substantially. The needs and goals of these two major LNG players are clearly on the path to convergence. That's it for this week. Thanks for kicking off your Monday with us and have a great week ahead.